Hi there, Colin Exelby here, and I'm a certified financial planner professional with over 20 years of experience providing financial planning for business owners and their families that just makes sense. And I own the financial advisory practice, Celestial Wealth Management, providing advice to clients all over the country. Now, before we get to the good stuff, here are the disclosures our attorneys say we should make sure to put up on the screen. It's always important as a financial channel to make sure we're disclosing the risks. And I know, but as a registered investment advisor, it's a requirement. Okay, now that that is out of the way, first off, I want to say congratulations. Getting to this point is a huge endeavor. And it's widely believed that the vast majority of small businesses fail in the first few years. And the statistics back it up. You're one of those that have made it to the end. You likely devoted a large portion of your life to make it a success, putting in crazy hours and making sacrifices along the way. So take a deep breath. Exhale, we don't do enough of that. But the future is always uncertain, and maybe more so for an exiting business owner. You're probably feeling a ton of emotions right now: excitement and pride, relief, anxiety, nervousness, uncertainty, and even fear. So what's supposed to happen next? Well, here are my 7 rules to follow once you've sold a successful business. Rule number 1, take time to self-reflect. When you're going through the process of selling a business, it can be all-consuming. Whether you were seeking a buyer or someone approached you, the process from start to finish is often the only thing on your mind. Now is the time to step back and reflect on your journey. We don't take enough time to appreciate our accomplishments and the people who helped along the way. I think it's important to express gratitude and reach out to the people who are instrumental in making your business successful. A simple phone call that just expresses thanks is incredibly powerful, and it really can mean a lot to that person. Additionally, when you get through the process, you may feel a void that will be difficult to replace right away. The realization that your life is changing in a new way, it can be hard. It may take some time before you're ready for the next challenge, and that is completely okay. But the way you manage your cash flow and investments should reflect this new reality. Without an income from your business, your immediate strategy should be on creating a cash flow while you figure out what is next. It's likely that you haven't thought about this next phase of your life in detail. Well, your investment strategy should reflect that uncertainty. Now is not the time to be swinging for the fences. Segregating funds into strategies for the short and long term may make sense. Short-term funds, they should be focused on preservation of capital, or as some call it, return of your money. And we'll talk more about that later. Rule number 2, recognize your balance sheet shift. You are not any wealthier than you were before the sale. Let me repeat that. You are not any wealthier than you were before the sale, but your balance sheet has dramatically changed. Before the sale, your balance sheet most likely was dominated by a large illiquid asset, your business. And while the business and business assets could often be used as collateral for loans and provide cash flow for living, the illiquidity of that asset impacts your freedom. Well, now you may be working for the new owner, or you might have distanced yourself from the company. But your wealth is no longer confined to your place of work. It's likely been moved to a bank. It's important to know that FDIC insurance covers risk of loss due to a bank failure for up to $250,000 per individual and an additional $250,000 per owner of a joint account. So in theory, a husband and wife could have up to $1 million of FDIC insurance if $250,000 was in each of their names and $500,000 was in a joint account. For more information on FDIC insurance, talk to your bank or visit the FDIC website. All right, now most likely the bank that received the proceeds is the one that you've worked with in the past. While the bank may have been great at helping you grow and manage your business, does your bank have the expertise to help you in this new phase of your life? Banks, while offering many services to their clients, are often not good at everything. It's time to reevaluate your current relationship. Family wealth management will be more important now. The larger the proceeds, the more likely that financial advisors, private banks, and wealth managers like myself will reach out and pitch their services to you. You know who else is most likely going to reach out to you? Find out in rule number 7 later in this video. It's important that you do your due diligence on the representatives and the firms that you're considering. Rule number 3, seek professional cash management. Post-sale, typically business sellers will leave their proceeds in cash from 3 months to up to a year before committing to a long-term plan. So successful cash management can improve your net worth. Your local bank branch typically services what are called retail clients. According to Investopedia, retail banking, also known as consumer banking or personal banking, is banking that provides financial services to individual consumers rather than businesses. Retail banking is a way for individual consumers to manage their money, have access to credit, and deposit their money in a secure manner. Now, there are often several layers between the retail branch deposit interest rates and the institutional money market, and each of these layers often scalps a piece of your investment return. The further away from the source you are, the more your potential return is scalped. Don't settle for the retail rates that are advertised at the local branch on one of those sheets. The larger the deposit that you're making, the easier it may be to bypass these layers and go right to the source. Potential direct investments include U.S. Treasury securities, short-term corporate debt, and short-term municipal debt. There are strategies that can be created specifically to your needs to provide daily or weekly liquidity. And you could potentially earn more than those paltry retail interest rates. Rule number 4, acknowledge the complexity and embrace it. Your new financial life may be more complex than you like. Don't be intimidated. But you are now a target. We live in a litigious society. We all know that. And you're now looked as someone who has deep pockets. The larger the business sale, the more people in your community know about it. I mean, we all have those local business papers and they talk about all the business sales. So people like myself read those and find out about it and pass it along to their friends. Unfortunately, that makes you a target for all kinds of scams and lawsuits. Now is the time to review your existing liability coverage. How are your assets titled? Do you have an umbrella policy? And are the coverages enough for your new financial situation? It's also time to get organized. If you haven't already, think of your personal financial situation like a business. Use software or work with an advisor to create a detailed balance sheet, income statement, and living expense worksheet. That will help you get clear on your current financial life. Your balance sheet will list all of your assets and your debts and how they are owned. Your funds may now be in several different structures, such as a holding company, family trusts, retirement accounts, and several individual accounts. Many new clients tell us that this part can be overwhelming, and they often procrastinate because it's difficult to find the appropriate amount of time to invest in this process. Like changing your oil, you can allocate the time and the resources to do it yourself, or you can hire a professional. A personal income statement can help show you what source of income you have scheduled and when they will occur. What salaries are being received by other family members? What annuity income are you scheduled to receive? Are you receiving any consultant or corporate advisory board income? What rental real estate income will you be receiving? Have you made private loans? When and how should you take Social Security? These are all important parts of income, and an income statement can help you know when they will occur. The living expense worksheet may be the most tedious of all, but most effective way to manage cash flow. Business owners often have an incredible understanding of what business expenditures they have, but they don't track personal expenditures in the same way. And if you're using a piece of paper and a pencil to put this income and expense sheet together, it's probably going to take you a long time. But thankfully, there's a number of great software aggregators out there that will monitor your spending for you, categorize and track it. It's really an incredible way to get a handle on what you're actually spending versus what you think you're spending. Because you know what I found? Most of the time, people are spending a lot more than what they think, myself included. So it's good to have that software to keep you on track. Rule number 5, communicate with your family. It's extremely important to communicate your new economic reality with your immediate family. Your spouse, children, and anyone else that you care for really might not understand what actually has just happened. There might be anxiety and curiosity and even fear of the unknown, like what's happening next. But if you don't take the time to discuss what's happened with your family and don't give them an opportunity to process it and ask questions, you may be setting yourself up for potential issues. Often selling your business is a dramatic change for not only you, but your family. And misunderstandings can easily happen from lack of communication. Now may be the time to set up scheduled family meetings that are away from the dinner table. So not over the grilled chicken or the steak, but put it in an open forum, maybe around the coffee table or fire, something like that, where people can ask questions. One of the biggest mistakes that we see is when families don't communicate, or they assume that children or spouses just won't understand or appreciate what has happened. Don't let that be you. Step 6, tax and legal complexities. Hopefully, if you sold a business, you already worked with your tax and legal advisors to get an estimate of your tax liability. It might be due all at once, or it may be due over several years. Now, there are a number of strategies to minimize or defer tax liability, but they often involve significant planning. I would acquire just enough knowledge of your options, but work with a competent tax advisor to structure the right course. And there's strategies that could be used prior to the sale, as well as strategies to put in place after the sale. For example, recent tax code changes in 2017 created an after-sale capital gain deferral strategy. It's known as Opportunity Zone investments. You may have heard about them on TV or on the internet. These are real estate investments that are made in qualified zones to spur jobs and development within those areas. These investments allow the ability to reduce and defer capital gains taxes from a business sale well into the future. Remember, it's not what you earn, it's what you keep. So maximizing the after-tax proceeds of the sale is a key component of building wealth. It's very likely that your current estate plan doesn't match the reality of your new circumstances. Your will, your life insurance, and any existing trusts, they might not be sufficient for your new situation. Are your current executors and financial agents acting on your behalf? Are they capable and even willing to handle the new complexities of your new estate if something happened to you? You might want to reach out to them or think about having new executors and new financial agents act on your behalf that have a little bit more experience. These could all be significant issues and are ones that really shouldn't be delayed. So working with a competent estate attorney to rework your new situation may make sense. All right, here we are at step 7. I told you we were going to get into this. Have a plan when family comes calling. Now, I save this for last because it's often the most important. And you know what's also important? If you're finding value with these rules, make sure you hit that little thumbs up and smash that subscribe button. Hit that little bell so you know whenever I release a new financial planning video. Now, believe it or not, selling a business can have a similar effect on a family as lottery winners or professional athletes after their signing bonus and first contract. Now, many of us have heard the stories of how many professional athletes end up broke, or how lottery winners often spend their windfall way too fast. The sad fact is that it may not be long before a family member or a friend comes to you for a loan. You probably have seen that stat. Just 39% of Americans can come up with $1,000 for unexpected expenses, according to a recent survey from Bankrate.com. Once family and friends hear about your windfall, they may expect or even believe they're entitled to some of the proceeds. It can be very easy to blow through the sale proceeds without thinking. You know what most people do? Get a little bit bigger, nicer home. A few new cars, pay for them with cash. Of course, they gotta be nicer than what you have now. A couple of nice vacations, a few local donations, because you wanna make sure that you're giving some of this back to the community. And of course, the community will reach out to you as well. And handouts to family and friends. And guess what? In a blink of an eye, a whole bunch of it can be gone. An additional role of a good financial advisor is to act as a gatekeeper. Many business sellers, they don't have anyone to turn to intercept the flood of requests from all those super close friends that emerged out of nowhere and the relatives that are asking for some of the proceeds. Family and friends may think the loan is trivial to you. He won't really care, she won't really care. It's a small amount of money for how much they made off selling the business. And they might think the same way about repayment of the loan. So if you do decide to lend money to the family, do you document the loan officially? Do you provide it with no strings attached? And what sort of precedent will it set with family and friends? These are really sensitive issues. A simple solution is enlisting an advisor as your gatekeeper. I've seen it many times, even with my own clients. Someone comes asking, I need to check with my advisor first to make sure that that's okay. But have a plan before the requests show up. That's extremely important. I hope that my 7 rules can help you prosper after selling your business. If you would like to discuss your business sale in more detail, feel free to reach out to me at celestialwm.com. And in order to maximize your financial planning strategy after the business sale, I would recommend that you watch these videos next. So just click on the screen right now and watch the videos. Get clear, be clear.